let's talk about regulation for a second. Right now, we've had the hearings here in New York. Senators have called for investigations. Federal Reserve Chairwoman Yellen, right, has said we're not going to get involved. What sort of regulation is needed? Is it the state banking divisions? Is it the Consumer Finance Protection Bureau? Is it FTC? Is it someone else? Who do you want regulating?
Well, Bitcoin's regulated. I mean, the FinCEN, which is the Financial Crimes Unit of Treasury, came out with guidance that said if you are operating basically as a money-changing business and exchange, you have to register as an MSB. And there's clear kind of rules as to how you have to act as an MSB. At the state level, the New York State Superintendent Lawsky is coming up with perhaps this concept of BitLicense, which would apply to New York businesses. California is looking at doing something similar. But the SEC has said it's not a security. CFTC, to date, has said we're probably not going to regulate Bitcoin itself, maybe the derivatives of it. FTC, I heard they were looking around, but I don't think they're going to do anything. And then from a legislative perspective, there's a growing number of members of Congress who are actually very excited about Bitcoin and its potential to provide financial services to underbanked, the unbanked. And there is no pending legislation on the horizon down in D.C.
This is where Barry and I would disagree. Barry said that Bitcoin is regulated. Now, I will tell you, Bitcoin is unregulated, and that is the problem. Who's going to regulate it? State bank commissioners are going to regulate it. We have a committee right now made up of 9 state bank commissioners, from Massachusetts all the way to Washington State, to California, to Florida. And these are boots on the ground. These are folks that actually have been working with money transfer companies. They go through the whole chain of distribution. When you think about the payment system, it's handled at the state level. So these bank examiners, in particular the state bank examiners, are perfectly aligned for that. I think the Consumer Financial Protection Bureau is going to be very involved in this as well. David Cotney from Massachusetts, the commissioner, he's leading this committee of 9 state bank examiners, and you'll see regulation come out quickly. And I think that's the key here, because in essence, entrepreneurs like yourself want to know what the rules of the road are, so you can actually expand in the right way and not, inefficiently use capital to be slammed by regulators. So the sooner regulators come out at the state level, the better. What is remarkable about what's happening, typically it's federal regulators that move quickly and state regulators follow. Here we have Ben Lawsky in particular in New York. He's moving forward. David Cotney in Massachusetts, he's moving forward, and we're seeing federal regulators that are going to be following state regulators. It's fascinating. It's very, very unusual to see, but it's exhilarating to think that there's going to be flexibility. In particular, the BitLicense in New York in particular is a great idea. I think it's a great way of filtering who you do business with. You get fingerprints, you get to know who these folks are. You have capital requirements, you have reporting requirements, all the basics that are needed to support and strengthen a system.
It could very well be a chain reaction. I think if we've seen anything in the financial industry over the course of time, it's their ability to package and repackage risk, as long as there's something in it for them. Right, so it could very well be the banks trying to get their piece because they see the growth, and then the regulators following them. And it's interesting from a state to federal level, but I think one of the challenges will be internationally how this is all going to play out, because you see Japan today calling it a commodity. China doesn't want any part of it. And one of the one of the things that really were the unintended consequences of the financial crisis, really, as the central bank began to export the crisis, as Mark alluded to, is really the FX imbalances in the system, and that being one of the mechanisms that could release steam from the global financial machination, which is still incredibly intertwined and held together with derivatives that themselves are unregulated, the over-the-counter derivatives. So there's a lot of, whenever you start talking about a global interaction, a global financial mechanism, there's a lot of unintended consequences, and that's something that I think will eventually play into this, but it'll be interesting from a sequencing standpoint to see how this all plays out.